Hey everybody, hope everybody's doing well. This is a rare midweek video for me. I might be doing these every once in a while when I have the time, if I find something that I really want to put out there. And today I did. And I'm actually kind of a little bit late, but it's also timely. I'll explain in a minute. So if you're new here, like, share, subscribe, do all that good stuff. I'm going to try to make these ones that I just randomly do a little shorter. So like, share, subscribe, comment down below. So if you can tell by the title, BST, which is a closed-end fund that I did a review on, I'll link up top and down below. Actually, I haven't done a review. I did one very, very long ago. I might have to do another one. But we're going to talk about a rights offering because BST is probably one of the best closed-end funds out there, performance-wise. You're getting around a 5% yield from tech, which is, pretty much unheard of. It's a very well-run fund, ran by Blackrock. It pays monthly, just a high-quality closed-end fund. And if you've been around, I always say that's rare in the closed-end fund scene, to have a extremely high quality closed-end fund. Now, BST recently announced a rights offering, and we're going to talk about what the rights offering is and what that could possibly mean. And I just want to keep an eye on this stock because it could represent a buying opportunity for new shareholders. So we're going to talk about what is a rights offering. Right here. This is a plan through which current shareholders of the fund are given the right to purchase additional shares in proportion to their current holdings at a stated price. The offering price is often below the market price and the net asset value, which is an inducement for shareholders to exercise their rights. However, this can also result in dilution of the fund's net asset value. It is one way that an established fund may increase the amount of capital at work in the fund, since the shares purchased in a rights offering are newly issued. Shareholders who take advantage of the offering by exercising their rights will maintain their percentage ownership in the fund, the ratio of shares they own to all shares available. In addition, in a transferable rights offering, which is what BST did, shareholders have the opportunity to benefit from the sale of their rights. So it's actually over as of today, I believe. But you could have bought these rights to buy BST at a discount. Now let's take a look at the terms, or look at why BST wanted to do this. So let's see right here. After considering a number of factors, including potential benefits and costs, the board and the fund's investment advisor, Blackrock, have determined that it is in the best interest of both the trust and its shareholders to conduct the offer and increase the assets of the trust available to take advantage of existing and future investment opportunities that may be or may become available, consistent with the trust's investment objective of providing income and total return through a combination of current income, current gains, and long-term capital appreciation. All expenses of the offer, including sales commissions, will be borne by the advisor and not by the trust or any of the trust shareholders. So essentially, BlackRock is seeing an opportunity in the tech industry, and they are wanting to raise funds to, take advantage of these opportunities. So that could tell you something. BlackRock is a big investment company, and they're seeing opportunities in the tech industry going forward. Okay. I know there's a lot of talk about tech is dying or tech's going to fall or whatever. That could be, what they're thinking too. Maybe they see some opportunity where they want to take advantage of a possible tech drop or a possible tech boom or continued boom, right? So, well, here we go. Here's their thoughts. Tech is positioned for continued growth. The offer provides the trust with new proceeds to capitalize on attractive investment opportunities in technology companies across public and private markets, potentially enhancing returns and yield. The offering also rewards shareholders. So current shareholders, it provides current shareholders an opportunity to buy new shares below market price or realize value from the sale of the rights. And then tax efficiency, the offer potentially mitigates sales of existing holdings that may result in the realization of capital gains, which may result in a taxable event for shareholders. Now, what that means is the fund, without doing this rights offering, and they want to take advantage of new opportunities, they'll have to take gains off the table off something else to move into these new opportunities that they're looking for, which in turn would create a taxable event within the fund. And then also enhance liquidity. The offer creates the potential for increased trading value and liquidity of shares. So if more people buy more shares and there's more people interested in the fund, the volume of the trading can become even greater. Lower expenses. The offer is expected to spread fixed operating cost across a larger asset base. So if they have a 1% expense ratio, that would be spread out among all the shares that were issued. So this also just goes over more of why, like, the technology sector is underpinned by powerful secular themes such as digital commerce and artificial intelligence that are reshaping our everyday lives and creating exponential change. In BST, we invest across public and private companies to capture innovative and disruptive technologies with significant growth potential. Raising additional capital will allow us to allocate to new investments and mitigate portfolio turnover that may otherwise trigger a taxable event for shareholders. So that's what I just went over. So if you are not a shareholder, you cannot participate in the discount that the current shareholders get with their rights. But it could put pressure on the stock. If people are not liking that they're issuing more shares to collect more funds, the share price might fall. And we've actually seen that. If we look at the chart from July 1st, actually, when did they announce this? They announced this on June 9th. So if we look back to June, didn't go back far enough. If we go back to June 9th, BST was trading at, 58.76, and today's close 53.85. So it's dropped almost 10%, right? So the current shareholders, their rights are going to be predetermined price of 6%. I believe it's off the net asset value? I'm not sure. I believe it's off the net asset value. Don't quote me on that. But right now, where it sits, BST is sitting at a 4% discount to their net asset value. Now, if you guys don't recall, closed-end funds trade separately between the share price and the net asset value, because the shares are priced on supply and demand, not on the value of the total of the fund's assets. So it's basically retail traders determining the price of what they want to buy and sell at. And so right now you have a rare opportunity to get a 4% discount on the net asset value. What will the share dilution do? I don't know. That's why I'm putting this out for you to keep an eye out on it. Because if this expands even further, I think it's a great opportunity to buy BST. It's actually, without the rights offering wrinkle here, if you were able to get BST at a 4% discount at any point, it was a great buy. Because if you look at this chart right here, The net asset value is in blue and the price is in black. And it's very rare that you got an opportunity to buy BST at any kind of a discount. It followed the net asset value pretty closely and even traded at a premium for a lot of times. It's even recently traded at a large premium. And just recently, just since this rights offering, it's dropped to a 4% discount. So, in my opinion, keep an eye on it. If this discount widens, maybe, I'd say start, if you're going to start a position, start it now and maybe dollar cost average in as the discount increases. If it decreases, or if it increases, if the discount increases, and just add to it. Because performance wise, I mean, this fund has proven itself, I think, over a long period of time, from October 2014 to today. It's almost tripled in price, which is rare again for a closed-end fund, and it gives you a 5% distribution monthly that they have actually recently increased. So that's another rarity in the closed-end fund, is getting increased dividends. So keep an eye on it. I said I was going to be quick. I don't know. It doesn't seem like this one was quick at all. If you guys enjoy these videos, please like, share, subscribe, do all that good stuff. Leave me some suggestions if you want to see some more quick take videos. Even though this wasn't a quick take, I'll try to make it one. You guys have a great day. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.